Hello everyone, this is the last video of this series of videos that go through the sample midterm 2 for 344. Question 21. Plaza Cafe has an operating cash flow of 83,770, depreciation of 43,514. And taxes paid is 21,590. And some balance sheet accounts are given and ask what's cash flow from assets, CFFA, equals to operating cash flow minus capital spending this is net capital spending minus change in net working capital. Let's just do it step by step. We know operating cash flow, that's $83,770. Net capital spending, equals to the end balance of fixed assets minus beginning balance of net fixed assets. Add depreciation. So it equals to 597,913 minus 599,608 at 43,514. So it's 41,819. This is the depreciation it's given. Let me double check. Yes. And the change in net working capital, we need to find out net working capital for the end balance. It will equals to current assets minus current liability. And net working capital for the begin balance, it's current assets minus current liability. So ending balance minus beginning balance, change in net working capital equals to ending balance minus beginning balance. It's negative 5,998. So cash flow from assets equals to $83,770 minus 41,819 minus negative 5,998. assets equals to 47,949. Correct answer is B here. Question 22. Any changes to a firm's projected future cash flows that are caused by adding a new project are referred as incremental cash flow. This is a definition. Question 23. The Green Tomato purchased parcels of land 6 years ago. At that time, the firm invested 128,000 grading the site so that it would be usable. Since the firm wasn't ready to use the site itself at that time, it decided to lease the land for $48,000 per year. The Green Tomato is now considering building a hotel on the site as the rental lease is expiring. The current value of the land is $415,000. The firm has no loans or mortgages secured by the property. What value would be included in the initial cost of the hotel project for the use of this land? So the cost here, those are book value cost or historical cost. And this one, the leasing is expired, so it's irrelevant. So currently, the company has two options. The first option is to sell this land and receive $415,000. The second option is build a hotel. So this 415,000 is the opportunity cost for using this land to build a hotel. That's what we should include in our capital budgeting analysis. Question 24. Mike's Fish Market is implementing a project that will initially increase accounts payable by 6,100, increase inventory by 2,800, and decrease accounts receivable by 1,300. All net working capital will be recouped when the project terminates. So what is the cash flow related to net working capital for the last year? So at the beginning, changes of net working capital equals to current changes in current assets minus changes of current liability. Inventory and receivables are current assets. So inventory increased by 2,800. And accounts receivable is decreased. So it's plus negative 1,300. And minus current liability increase by 6,100. 2,800 plus negative 1,300 minus 6,100. So it's negative 4,600. That is the correct answer here. Question 25. A project has annual depreciation of $15,028, cost of $82,592, sales of $138,762. The applicable tax rate is 34%. What's the operating cash flow? So operating cash flow will be sales, operating cash flow equals to sales minus costs times 1 minus tax plus depreciation times tax. So equals to sales 138,765 minus costs 82,592 times 1 minus 34% plus depreciation 15,028 times 34%. So let's do the calculation here. So the first part is $37,074.18 plus left bracket 15,028 times 0.34 right bracket equals to 42,183.7. So correct answer is D here. So thank you very much for watching this video, and this is the end of this series of videos.